cover the new core chart, which is designed to simplify identifying the single T, continuation, and momentum trade setups. And in today's training, we're going to go over the more advanced chart that'll let us identify all of the trade setups and how we can use this. And you'll see some of the differences of how we can use this to anticipate some of these trade setups more effectively and enter in as far ahead of time as possible. We'll also cover what to look for to stay out of choppy market conditions. And just when, if there's any clues we can glean from the indicators that let us know that it may not be the most ideal time to enter trades, or during these types of market conditions, it is a bit more risky. So if you didn't join us yesterday, don't worry, that was recorded. And we'll try to get that up as soon as we can. So let's put my market start time here. All right, these white lines, if you've never joined us before, these white lines will indicate the opening bell. And before we start, something very important I'd like to bring up. It is very crucial when trading with Pro9Trader is market news. So we're concerned with any news that has a red, black, or green dot next to it. So today we did have some news at 8:30. That's before the market opens, so we're not really super concerned about that. We do have this news at 9:45 and petroleum status report at 11. And this is really only applies to the CL. It's really the only market we sit out for. But around any of these news events, we want to sit out 5 minutes before and 5 minutes after. So for this news event, we'd be sitting out from 9:40 to 9:50. The natural gas report, we're not really concerned about because we don't trade natural gas. If you do, I would definitely keep that in mind. There is some situations I would like to point out where we have 9:45 news and then a 10 a.m. news that we also pay attention to. So we'd be sitting out from 9:40 to 9:50 and then again from 9:55 to 10:05. So we have this really short 5-minute window where we can enter new trades. So during this type of news, I'm more in favor of just sitting out that extra 5 minutes. I think it's a little too risky to try to snipe a trade in that small window. And I would like to clarify during these news times that we sit out for, we don't enter a trade, we don't enter into any new trades during that time. So if you have, or if you're already in a trade, continue to manage it through that news event. That's totally fine. But we do not want to enter into any new trades. My apologies. Good morning, everyone. Welcome to our quick start training. Not sure how long my mic was muted. We're going to be covering, I'm sure it was covered during this news chat, so I'll run over this briefly. We don't enter into any new trades during these news events with a red, black, or green dot next to them, excluding markets we don't trade, like natural gas. We don't trade the NG, so we're not really concerned with this one. And petroleum, we're really only concerned with this in the CL. I would like to talk about, occasionally there are news events. There's one at 9:45 and another one at 10. So we'll have a very small 5-minute window where we could enter a new trade. So I'm of the opinion we should just sit out that extra 5 minutes and wait till we're clear of news to start trading. If you're already in a trade and news is coming up, you can continue to manage the trade through that news event. So real quick, all right, Steve, just give me a bit. So we're going to try to do these trainings a bit different, where for the first hour, I'm going to try to walk through all the trades. And then the last half hour, I'll dedicate to questions. And I think this will help keep the educational part of it on track. So if I don't get to your question, don't worry. I will get to them in the last half hour of the training. So if you guys have any questions about specific trades, just go ahead, throw them in there with the exact time. And if we don't end up covering it in the class, I'll go back and review it as well. All right. So let's go ahead and jump right in here. So we do have our first qualified momentum here. And this one, as we can tell, does go against us. Sometimes that's going to happen. Sometimes it is the first trade of the day. I actually really like when we have debriefs that show the first trade of the day as a losing trade, because then it demonstrates that if we stay focused and disciplined on identifying the trade setups, that quite often the rest of the trades are winning trades, and we can more than make up for that initial loser, as the psychological aspect of trading can weigh quite heavily on us because our money is involved, and I don't know many people that can be totally unemotional when it comes to their money. So, but we all do need to be aware there is risk involved in trading. Obviously, I'm sure we all know that. Otherwise, we wouldn't be traders. And this is going to happen. And I know a lot of things run through our minds when we see the first trade of the day go against us. You know, is it working? All this kind of stuff. And really the only thing you can do is stay disciplined and stick to the rules. But this was fully qualified. So we do have our momentum arrow. Let me bring up our momentum rules. So I did see some other momentum trades down the line that we'll get to. We have our arrow. We have our 10, 20, and 50 EMA in the correct order. And our green background will also let us know when these 3 EMAs are in the correct order. And we have our momentum arrow, and the blue line is greater than the histogram. So all 3 of these conditions are met. Our trade is qualified, and we would enter using the green DPI, 1683.4. The trade would be with 3 contracts and a 15-tick stop. And in this case, the next bar is a turn bar, so we don't have the opportunity to hit our profit target. So after this, we see the market does start to reverse. So our EMAs are not in order, so we're likely not going to see a trade setup here. Possibly a dot trend, but those are pretty infrequent, happening only maybe 3 to 5 times a month in a given market. So hopefully we'll be able to catch one today, but they are kind of infrequent. And as the market continues to move, now we do see that our EMAs do get in the correct order here, and we do get clear of the 200 for this momentum short, and that is very important. is this 200 EMA. It's the largest and slowest moving EMA. Can act as a very strong point of support or resistance. So we want to avoid entering a trade that is going to run into the 200 before we hit our profit target. So another way to look at this is we want to have enough space to hit our profit target before running into the 200, or we want to be clear of the 200. So either one of those. The DPI indicator will now warn you. It will be yellow if you are too close to the 200. So if you see a yellow DPI in the direction you're looking to enter the trade, you do not want to enter that trade. So here we have our red background again, letting us know that our EMAs are in the correct order. We have our momentum arrow, then we have our blue line, qualifying our momentum trade. So we would enter with the red DPI, 1676.4, and we'll enter again with 3 contracts, a 15-tick stop, and looking for a profit target of 6 ticks with our first 2 contracts. Now after this first color bar plots, we're more than halfway to a profit target already. We're looking for a 6-tick profit target, and the market has already moved 4 ticks. And I know this because it takes 4 ticks in the direction of the trend to plot a new color bar, and 22 ticks in the opposite direction to plot a turn bar. After this next bar, before this next bar even finishes, we'll have hit our profit target. And with the momentum, a few things can happen. We can hit our profit target, and we want to sell 2 of our contracts and adjust the stop on a runner to break even. Now, since we hit our profit target in the middle of this bar, we may adjust our stop to break even, and it could retrace a bit and knock us out. At least we hit our profit target, so we've extracted some money from the market. The market could keep moving, which in this case, we'll assume that for the sake of argument, so we can walk through and demonstrate how to manage the runner, because we do institute a trailing stop after a certain point. And that will be after the 4th bar from our entry bar, which in this case we don't reach as we get stopped out by this wick here. So either way, this runner would have been stopped out at break even, which is going to happen sometimes. We aren't always going to be able to catch a runner, but we want to have that contract in there as an opportunity with no additional risk for when we do, because I'm sure we wouldn't be too happy watching a long run pass us by when we didn't have that contract in there. So, but now that we got stopped out by this wick, we have another momentum entry, and we manage that one the same way. And again, this one hits its profit target at 6 ticks, and we can adjust the stop on our runner to break even. And again, looks like we catch a little wick here. So, but we do not see a momentum arrow, meaning that this wouldn't be a qualified entry. So, and we can check and see 0.4. Yeah, so this looks like it does just come up and touch our break-even stop. So, and then there was this one at the end, but it didn't qualify because our blue line dipped inside the histogram. A possible divergence reversal setup, but not fully qualified, so if we come to one of those a bit later, we will definitely cover that. And then we have another momentum entry, and we are a little close to the low of the day. So in this case, I do want to be aware of where my low is, just to make sure I have enough space. So my entry is 6070.8, and the current low is 6070.1. So I have 7 ticks of space, which is enough room for me to enter the trade. as the high and low of the day can always act as a support or a point of support and resistance, just like the 200. So when I'm heading into the higher low of the day, I either want my profit target plus a tick worth of space before running into the low of the day, or I want to see my direction histogram outside of its neutral zone, giving us the extra confidence that we're going to at least hit our profit target. The reason for that is that's one of the rules that qualifies a breakout, is that the direction histogram is outside of its neutral zone. So it wouldn't make much sense for me to enter into a trade, and then before I hit my profit target, it's going to put me in a situation where now, I mean, even though I may be halfway to my profit target, but I'm now in an unqualified breakout situation. So that's the reason for that rule. And it is universal. That will apply to any trade that is heading into the higher low of the day or the 200. But the 200, we either have enough space before we hit our profit target or we don't enter it. There's no indicator that's going to give us a signal that we're going to move to the 200. So again, manage this one much the same way, or exactly the same way. 3 contracts, 15 tick stop, 6 tick profit target. In this case, we would hit our profit target before hitting the low. But even still, it looks like the direction did just get out. So we do have a possibility for a breakout entry here as well if we miss this momentum. I mean, ideally, you want to get in on the first entry point possible. But there are some members who like to stack trades, or if we just miss the entry, which will happen for various reasons. So the breakout trade, we're looking for our direction histogram to be outside of its neutral zone, which is this gold range, or minus 50. So we need to be at minus 51 or below for a short breakout. And our entry will be 1 tick below the current low of the day. And if we check this bar didn't actually break through. But what we can do is, once we see this bar close, I see my direction histogram, get outside of its neutral zone. And I can put in my stop limit order right now at -1, or 1 tick below the low of the day. So it actually put my order at 60.70 even. And then when the next bar actually pushes through that low of the day, it will fill our order. It's very important to use stop limit orders because we want to set the price at which our order is filled. We don't want to try to get into where the market is at the time. We really want to use the DPI prices as our entry. 1, it's part of the rules. 2, it lets us identify our entry point at a glance, so we don't have to do any math or try to figure out where the exact middle of the bar is or any kind of that stuff. And it also lets us watch and see the market prove to us that it's going to continue moving in the direction that we expect and want it to move. Of course, not always going to be the case, but about 4 out of 5 times it is. So once this bar breaks through the low, we will enter, our order would be filled and we'd enter our breakout trade. So the rules for a breakout trade, the price is hitting the daily high or low. Our direction is outside of its neutral zone. And the entry price is 1 tick above the high of the day if we're going long, or 1 tick below the low of the day if we're going short. And the trade can be taken up to a maximum of 10 bars from the most recent white turn bar, meaning no later than bar 10. And I do find that for those first starting out, this can be a little bit of a point of confusion because they'll ask, I missed this entry point. Can I enter on bar 9? I'm still within bar 10, right? Well, not really, because we've already broken through the low of the day here. And look at the rules. Rule 3 is the entry price is one tick below the low of the day. So where are we going to enter on this bar 9? We don't want to enter onto this new low, even though it is the current low, but we're not really breaking out of a low at this point. We're creating a new low as each new bar plots. So it is a very important distinction to make that when we talk about a breakout, if you picture something breaking through a wall or a barrier, it only breaks through once. It doesn't continue to break through the same wall as it moves. So I want to think of the breakout in the same way. It's only going to break through a low once. And that only means this particular low right here. Now, if we move down and establish a new low, and the price comes back up, and then moves back down and looks like it's going to break through that low, we'll look at that as a separate breakout. But for each established low, it can only break out one time. So I just like to throw that clarification on there. So I find it can be a point of confusion. And so this rule is saying basically that we have up until bar 10 to break through the low. So if bar 10 is the bar that breaks through that established low, we can still enter that breakout. If it's bar 11, no good. We're not going to enter that trade. We just don't have the confidence that it has enough steam to let us at least hit our profit target. So back to the breakout and how we manage it. It has a 15-tick stop and an 8-tick profit target. So at our low of the day, which was 1670, I believe, we would enter with 3 contracts, put our 15-tick stop, and our 8-tick profit target. So we're looking at 1670, and we would have hit our profit target before the close of this bar. And again, once we hit our profit target, we sell 2 of our contracts and adjust the stop on a runner to break even. So this is an example of how even if we miss an entry, we may still have an opportunity to hop in that run again. And that's really one of the main purposes of the momentum, as we didn't have a qualified entry for this run back here. Now, there was no qualified single T on either of these bars, which are the only ones we can enter these trades on. But a few bars later, we have a momentum entry, so we can at least hop back in on this run and hopefully catch the rest of it, depending on how far it moves. So rather than cover how to manage our trailing stop with the breakout, I'm going to jump back to this momentum as we do get to the point where we start trailing, and I want to highlight that so we can go over how do I manage the runner as this trade continues to move. So remember, we entered our momentum here at the DPI that created this bar, hit our profit target before the close of bar 7, and after the 4th bar from our entry bar, we want to adjust our stop from break even to the high of the previous bar. And that's because we're trending short. We're going to use the high of the previous bar. If you're trending long, you want to use the low of the previous bar. And as each new bar plots, we'll adjust it to the low of the previous bar, or the most recently completed bar. And these yellow numbers will indicate what that price is for you. So this is telling us the high and low of bar 10. As we can see, if we open the data box, we do this by pressing the mouse wheel over a bar we want to look at. We can see that the high is the same as well as the low. So it's a pretty handy indicator. Lets you identify where you should be trailing your stop at a glance. And then once we get to the sixth bar from our entry bar, we can widen to the green DPI price. This is optional. You can either widen to the green DPI, or easier to say, the opposite color DPI of the bars you're trailing. So if you're trending short, you're going to widen your stop to the green DPI. You won't actually be able to put your stop at the green DPI because that would be ahead of the market. Or, so rather than widening to the DPI, we can just continue trailing this at the high of the previous bar. So each one is acceptable. I prefer widening to the DPI price, and hopefully we see an example of that. So for this example, I'm going to say my price is widened to 1670.6. And when that price is reached, a turn bar will plot. So the only thing that is going to stop me out once I widen to the green DPI is a turn bar. And then as each new bar plots, I'm going to adjust to the new DPI. So 1670.2, which you'll basically be moving it up 4 ticks every bar. And again, continue to adjust to the green DPI until we get stopped out. And the good thing, here's a good example. It's not really a huge wick. So even if you're trailing at the high of this bar, this wick wouldn't have stopped you out. But there are times where this wick pops up enough, whereas if we were trailing at the high of the previous bar, it would have stopped us out. And we would have to hop in on another momentum entry. With widening to the DPI, I can just ride over any wicks that pop up on this run. Every bar after this point could have a 19-tick wick on it, and wouldn't get stopped out, because I'm only going to get stopped out when I see a turn bar, which would be 22 ticks in the opposite direction. And then eventually I'm going to get stopped out by this turn bar here. But I was able to take part in this entire run, and would have been able to as well, trailing at the high of the previous bar, but that's not always going to be the case. So I prefer widening to the DPI, as it makes managing the trade simpler for me, less stressful, as I don't have to worry about getting stopped out and hopping in on a momentum trade that may be the bar before the turn bar. As we saw in this first example, because there's no way to tell where that's going to be. So something to keep in mind as we look at these different ways to manage our trailing stop. So I find it's much easier just to adjust to the new green DPI as each new bar plots. Easier to manage and much less stressful. I mean, initially we do give up a few ticks or widen a few ticks from our possibly established profit from our runner that we had when we were trailing at the high of the previous bar. But I think it gives us potential in the long run to take part in longer runs, but over the course of 6 months or a year, I'm not sure that it affects the overall P&L that greatly. So, but just something to keep in mind. Those are both optional for you. So, and then doesn't look like much else brewing. couple momentums. Let's see if we can hunt out some other trades. So the CL here does look pretty choppy. So, and recall we did have 10:30 CL news. I would like to point out it is rollover time for the CL. So we are on the 317 contract, and it can be like this during that rollover week, as you know, some people tend to stick to the previous contract, and others will move to the current contract. So you'll see the volume may split a bit, so it may not be as full as you're used to seeing, and so something to keep in mind with the CL. And it may happen on other markets that have a monthly rollover, but the other markets we look at rollover every 3 months. So it's not something we really see in those markets. People tend to follow the rollover date pretty closely in that. So we did have a single T here, 2 single T's in a row. So now we are seeing these kind of short, choppy cycles, which does mean it may be a bit riskier to enter into some of these trades. So something to keep in mind, even though we don't have these full signs of chop, which we'll definitely cover as we see them. I think this section is a good example of what we're looking for with a choppy market. So we want to see multiple turn bars in close proximity to each other. Our EMAs roped on top of each other. And typically you want to see the direction histogram a little closer to the 0 line, but as well as the super trend, which this is kind of weak. This is telling me it's fairly choppy. But the strongest sign is this, the blue line not heading back and forth toward extremes. So when I see this blue line, even though it is on the correct side, I may be a bit worried that I'm heading in a chop. But you know, what does sometimes happen is we don't always have clear signs of chop before a trade presents itself. So we may end up getting in a trade that goes against us before we can fully recognize that we're in a completely choppy market. But after that, we can definitely ascertain that we are in a choppy market and can stay out of the market until we see one of two things. We want to see our blue line travel back and forth to extremes, or we want to see a trade win without us. So I think in situations like this where we do see these kind of short cycles, I like to wait and see a trade succeed without me. So in this case, this one did. So after I skip this entry, it is possible to enter onto this momentum fairly safely. Although, you know, seeing the CL like this, it's just a bit choppy. During those times, I like to just put it on the back burner, maybe check in on it throughout the day. But we always have options to check out other markets as well. Which is something I find that some people do have their favorite markets, or they trade one market exclusively, and I just think it's much better to have options. You know, if you only watch one market, you're going to see days like this. There may be periods of time. Sometimes oil goes through a week or two period where it's pretty slow, and any of the markets can do that. But when that happens to the only market you trade, what do you what are you going to do after that? Or what are you going to do during that day? Are you just going to watch that market and uh, watch a bunch of chop and not really see any good qualified trades? So I'm of the opinion it's good to have options when we're trading. We looked at our EMD. I would like to see if we have, let's look at our continuation here. So this will highlight, we'll go over the uh, differences between a single T and continuation here. They are very similar to each other, but there are some subtle differences that are important. So our single T, we are looking for the 10, 20, and 50 EMA to be in the correct order. The 200 is not required to be in the correct order, but the setups are stronger when it is in the correct order. We're also looking for our super trend to be outside of its neutral zone. Now, if you'll notice, we can ignore this rule if the turn bar or first color bar touches the 50 EMA. In this case, the 50 EMA is way down here, so we weren't even close. So we do need to keep in mind the super trend being outside of basically at plus 20 or above. Then we're looking for our white turn bar and for our blue line to be on the correct side of the histogram. So if we look at this point, we see that the blue line did not quite make it to the correct side of the histogram, right? But it did on the first color bar. So in this case, the trade confirms on the first color bar. And we could attempt a retracement to the turn bar entry price if we wanted. But entering up to the first color bar is also acceptable. So, and I would like to point out that that is the latest point that we can enter into a continuation or single T trade. So if we don't get full confirmation until the third bar, that's a late entry. So now with this particular example being a momentum setup, that's a different story, as this is a separate trade. But for a continuation or a single T, or really any of the trades that we enter on a turn bar, all right, let me grab this because this is from Mike. Thought a continuation was qualified by 2 white bars or a TCT, not just the presence of a white turn bar. Yes, that is correct. So, and that was what I was going to get to with the difference between the continuation and single T. A continuation will always appear in this configuration. We have a turn bar followed by a turn bar. So we had this run, we have a short reversal, and then another reversal. So this can basically be thought of as a continuation of this run. You may also see a turn bar followed by a color bar and another turn bar that would be our entry bar. So those are the two configurations of a continuation. As we saw with the CL and our single T here, we have more color bars in between these turn bars, right? So the reversal or the price has reversed direction long enough for this to be considered a single turn bar entry. So that's one of the main differences with the single T. If we look at our rule 1, we're looking for the 10, 20, 50, and 200 to be in the correct order. Now you may say, why is this a qualified single T if the 200 is way up here? Well, if we look down in our bullet points, we have When the turn bar or first green bar touches the 50 EMA, the 200 is not required to be below the other moving averages. So in this case, we did touch the 50, and that's because bouncing up the 50 EMA is a very strong signal. So letting us know we can disregard the 200, and that we're very likely to hit our profit target, at least, if not just move on through the 200. But we still, now since we're not looking for the 200 to be in the correct order, we do have to worry about running into it. So that rule also applies. We do not want to forget about that. It's very important. So we'd enter our continuation trade on this first color bar. And our continuations have an 8-tick profit target and a 22-tick stop. And again, with 3 contracts. All of our trades we enter with 3 contracts. If, for whatever reason, you might not be comfortable starting with 3 contracts, you can trade 2 and just remove 1 at profit target and leave the second one on as the runner. And the same management applies. So we enter at this green DPI that created this turn bar, or this first color bar, at 5070.25. Now we do have this tail here, but it did not come down 22 ticks, obviously, or it would be a turn bar. So we did not get stopped out. So after the trade moves 4 ticks in our favor, we are going to adjust our stop from 22 ticks to 18 ticks. The market moved up 4, we're halfway to a profit target. We're going to move our stop up 4. And then at the close of bar 4, we'll have hit our profit target, sell 2 of our contracts for our 8-tick profit target, and adjust the stop on a runner to break even. And then likely this tail would have stopped us out, but we have an opportunity for another momentum entry, and it may have hit the profit target. So our entry is 5073.25. 5074.75. So it looks like it ticked up there. May not have traded through it though. And then here we have another momentum entry short as well. We had a few earlier in the NQ. So, but as we can see, kind of a bit of a slower market day, so not a ton going on, and that can happen sometimes. Whoops. And you can see the YM is pretty slow today. Not a ton going on. There were a few qualified trade setups. But again, still do have some opportunities to enter these trades. So when I see this initially, the 200 here and these EMAs, we haven't really seen a clear direction of the trend. I'm a bit wary of entering a trade that's not clear of these EMAs because what can happen sometimes, and I'm sure you guys have seen this looking at some of the charts, is the price can get locked in a channel between these EMAs, sometimes the 20 and 200 or the 50 and 200, and the price will just bounce back and forth a couple times, and there's no way to determine when it's going to move past those EMAs. So you really want to wait until we have an entry that's clear of that. So we do have this short momentum entry that does hit profit target, and then we also have a continuation a bit later, this continuation short. So we'll walk through this. So, and I would like to point out, as this is a common question, I'm sure you guys have noticed our momentum arrows on the turn bars as well. We just disregard those. There's just not a way to filter those out from the turn bars and the way the uh, momentum arrows plot in real time. And if they didn't plot in real time, we'd have a harder time entering momentum trades at the most ideal time. So for the purposes of trades on a turn bar, we want to disregard momentum arrows because we do have extra rules that we qualify on these turn bar entries. So for a case of a single T or continuation, we also do need confirmation from the super trend and our turn bars. That is in the rules as well. While it is indicating a point of entry, it is letting us know that we can enter on the DPI that creates the turn bar or the DPI that creates the first colored bar. So before we jump into this particular trade, I'll go over the DPI indicator, as it is very helpful to understand what this is telling us, as it's a very powerful indicator and useful tool that can help us anticipate the not only what our entry price is, but we can use it to anticipate what will happen if the next DPI, or if let me think of a good way to put this. So it'll let us anticipate what will happen if a certain DPI is reached. So of course we're not going to be able to know what will happen, but we have one of two options. It's either going to hit the red DPI, in this case, and plot a red color bar, or it's going to reverse and hit the green DPI and create a turn bar. So every bar that's plotting, it can only be one of those two things. Fairly obvious. But we can use this to anticipate what we should do ahead of time, because I know that in this case, this is a qualified momentum entry, right? My DPI is 19,685. So I know when this DPI is reached, that will fully qualify my momentum trade. So even now at this point, I could enter that DPI price and put my stop limit order at that price ahead of time, even though it's not qualified yet, but it will be when that DPI price is reached. Although I would be a bit worried about this tail and the blue line, as it is a kind of an edge case when this happens, but occasionally when we have a tail or a wick, it can pull the blue line a bit, and even though it's on the correct side, it may dip across or come right on the border, so just something to keep in mind. But as for a way to, and what we can do to anticipate, so in this case, right, we just had a short trend, came back up a bit. My blue line was on the correct side, came back up, but I'm not going to have a long trade, right, because my EMAs are all lined up for a short. But I may be setting up for a continuation short, even though I don't really see that yet. But let's run through our rules for a continuation short, and we can see how we can anticipate this. So I know I do still have my EMAs in the correct order, my 10, 20, 50, and 200. My blue line is not on the correct side, but it is very close to getting to the correct side of the histogram. As a visual indication, if we're not sure, occasionally it is very close, or it may be difficult to tell just by looking. The blue line will turn white when it crosses from one side of this purple line to the other. My super trend is outside of its new, no, not quite, but that's okay, because look where the 50 is and look where our color bar is. So during the creation of this bar, I would have seen it cross the 50. Because keep in mind, in this case, if we were watching this chart in real time, this bar would be ticking up and down, kind of depending where it wants to go. Right? So at this point, it doesn't look like anything, but there is a possibility that when I hit this DPI, even I look at my super trend, it's 2 away from being outside of its neutral zone. So what I say to myself is, I'm feeling very confident that if I hit the red DPI, it's going to create my turn bar, right? That's one of my rules. My EMAs are already in order. That's 2 rules. I'm fairly confident that my blue line will cross to the correct side of the histogram. We're pretty close. And this is one of the most difficult things to tell, is that we don't always know how far the blue line is going to travel, right? And with more experience and more chart time, it gets easier to determine that. When it's very close or right on the edge, it's fairly safe to say that it's going to cross to the correct side. So in this case, I may be a little more wary, and I want to wait for the turn bar to plot anyway, just to confirm. But for this example of how we can anticipate, even though it doesn't look like we have a full setup, I'm going to say I'm extremely confident that if this bar turns into a turn bar, that my blue line is going to cross and the super trend is going to be outside of the neutral zone. Even though I can disregard that anyway, I want that extra confirmation, right? So at this point, before any of my rules have actually lined up, I can put my red DPI price in, I can put my stop limit order in, and then if that price is reached, which in this case it was, I do see my blue line get to the correct side of the histogram, and my super trend just gets outside of its neutral zone. So I put in my order anticipating that when my order price was hit, that the trade would be fully qualified. So this is just an example of how we can use these to anticipate that with the DPI. One of the main things I do want to clarify is the blue line. So there are going to be times where the blue line is kind of far away from getting to the correct side of the histogram, and I follow the rule, if I'm not sure, wait. It's much better to wait for the bar to close and confirm that the blue line actually gets to where it needs to be to qualify that trade than to enter in ahead of time when we're not sure or we're not past our comfortable threshold of confidence, whatever that may be for you. For me, I say if I can look at the blue line and say, I'm 95% sure that that's going to cross, I'll enter in ahead of time. But if it's far, if it's 20 or 30 points away from getting to the correct side, I'll definitely wait to confirm, because I can always go for a retracement entry, or I can enter on the first color bar. And typically, the market does retrace to the turn bar entry price. So another point about this as well, since my order was the red DPI, right, and I was anticipating a few things happening when that price was hit, what if my price isn't hit? What if the market reverses, hits the green DPI, and continues plotting in green bars? Well, my red DPI was never hit, meaning my order was never filled, and I can just cancel that order and wait for the next qualified trade. So one of the things that I do think that's kind of something that beginners miss with this, and they want to fully qualify the trades. Now, I'm not saying if you're new to this, you should go out there and cowboy it and just hop into all these trades thinking the blue line's going to cross all the time, because it does depend where it is in relation to the edge of the histogram. So, but I just wanted to show you this example because it is good to kind of build the idea of that we can anticipate these trades. It is possible to do that ahead of time. So we're not always trying to jump in after the fact, right? We don't want to be that person who's chasing after the train trying to hop on the caboose, right? We want to be in early and get the best seat. So, and that's one of the ways we can do that. A few other things that help that cause is to keep a running tally of what rules are qualified as the market continues to move. That way, if we see a possible trade entry, first of all, we can filter possible trade entries quicker. And we don't have to run through the entire list of rules because, like I said, in this case, I already knew my EMAs were in the correct order. So I didn't have to requalify that. If my EMAs were in the correct order 10 bars ago and they're still in the correct order, they're still in the correct order. So that rule's qualified. Just make a mental note to myself. That rule's still qualified. So a few things that can help us to do that and form good habits. Of course, if you are first starting out, we do recommend focusing on the continuation, single T, and maybe throw the momentum in there after a short time once you're comfortable with those. We suggest focusing on those first because they are very foundational trades, kind of lay the groundwork for identifying the rules, help you get comfortable with these rules. They're responsible for a large percentage of the trades we take. The divergence reversal is a bit more uncommon, and the dot trend is even more uncommon than those. And the breakout, while we do still see quite a few breakouts, what typically happens is you may get a momentum entry before the breakout, but you still do want to be familiar with the breakout trade in the event we miss the entry. So it's bound to happen sometimes. All right, everyone, looks like we're down to the last half hour already. Time sure is flying in these classes. So now I'm going to go through some of these questions. So if you guys had any questions you were holding on to, want anything clarified, now's the time. All right, Stephen M. My background color has been printing green and red when direction blue line isn't above or below purple line. Also, sometimes the green or red background doesn't print when all the rules are met. What do I need to correct? All right, so you likely just want to go to the Academy Day Trading site and re-download and install Pro9Trader. There was recently an update. So the update should fix that issue for you. Joe was pointing out a couple setups, so let me refresh my EMD because I actually don't have live data on my EMD, unfortunately. I am working on that though. And then you also pointed out in the YM, that momentum trade. Yep, so that one looks like it would have hit profit target. So
how differently does he want it set up?
Mike is asking at 1047, that white momentum bar is valid for a momentum trade regardless of that turn bar, right? Which market was that in? I believe you're talking about, okay, this one in the YM. Yeah, so I did, just to reiterate, for turn bar entries, you basically want to just disregard these momentum arrows. because they are going to pop up on the turn bars, but we do have the extra qualifiers for these entries, and we do want to follow those. So a momentum trade will appear in the middle of a run. Oh, Mike asking a great question. Do you recommend starting off with unfunded trades before using the software on real trades? Yes, for a few reasons. One of the main ones is you really want to get the feel for entering these trades and managing them rather than just kind of going over the theory of it without ever having entered any type of trades. So, and you really want to get a really good understanding of the rules so we don't miss anything, because you don't want to start entering live trades before we really have all the rules down and other things to look for, like running into the 200, running into the higher low of the day. These different things we need to be careful of. So, yeah, most definitely enter a few trades or run, watch the markets for a week doing sim trades, see how you do. You can assess, go back and check, see if there's things you're missing. And, once you do that, then you can just revisit. And when you feel you're ready to make live trades, you can go for it. So, but you definitely do want to practice first. And Jay is asking, what does the yellow turn bar mean? Great question. Did not go over that yet. So the yellow turn bar will basically lets you know quickly that the super trend rule is not qualified. So if the super trend is not outside of its neutral zone in the correct direction, or if the turn bar does not touch the 50 EMA, it will be yellow, warning you that you should not enter that trade. And you may also occasionally see a yellow DPI number, and this warns you that the your entry price is too close to the 200. So anytime you see yellow turn bar or yellow DPI, it's warning you, hey, don't enter this trade. And Jennifer H is asking about recoil. That would be a separate training session, and I'm sure they'll be starting one soon, since that was just released. All right, Mike, and did I get that question answered for you regarding the turn bar and the momentum arrows on the same bar? All right, excellent. So, guys, feel free to holler at me. Any other questions you have? That looks like all of them for the moment. So I'll continue hunting for some other trades, see if we can spot this one, a divergence reversal. All right, excellent. One we did not cover yet. And give me just a second. Hold on one second. All right, and we're back. Just had to get a quick drink there. All right, Joe mentions possible movement improvement, yellow DPI when approaching high low of the day. That is a great suggestion. I'll definitely pass that along. The only thing is the more we uh, have the indicators reference each other to, well, it does make it easier, is that there is a cap on the memory usage of these charts. And the more you try to do that, uh, it can cause significant slowdown. So I think with the way it is now, we're right on that edge, um, where if we added in and made all the indicators, it may not be as effective as just having the high-low on there. So, because keep in mind, we do have these high-low tags on the side. This will tell you the price. So we don't have to check the data box if you want to see the current high-low. Um, and I'm pretty sure you can just set these to red and green. They should be by default, but just give me 1 second here, guys. I want to. Perhaps not. I thought it used to do that, but I guess not. Anyhow, Roto asks, is there any difference between the Pro 9 and Pro 9 Elite? Yes, they are. The Pro 9 is a simplified chart. And you won't be able to identify all of the trade setups from it. I don't think I have it installed on this chart or this computer. I can queue that up for tomorrow. If you'll be with us tomorrow, we can show you an example from that. But it will only let you spot the single T, continuation, and dot trend. So if you're starting out, kind of want a more simplified chart, that may be an option. It can always be upgraded to Elite later. I think these charts are fairly simple and streamlined as it is. Anyhow, there are a ton of indicators. So, and there's really, most of the time, there's 4 rules we have to check for, 4 different indicators. So, but yes, Mike. So let me run through this divergence reversal, and then I will bring up the core chart. As we did run through that yesterday, but I'll just kind of go over it briefly. All right, so our divergence reversal short. Our first clue that a divergence reversal is on the horizon is going to be a dot. So if you're trending long, you'll get a red dot. If you're trending short, you'll get a green dot. So this is our first signal letting us know, hey, possible divergence reversal on the horizon. The next thing I check for, because the red dot will pop up somewhere in the middle of the run and will continue just trailing the run until we get a turn bar, and then it will stick to the turn bar. So it kind of gives us a heads up. The next thing I check for is my super trend. So if we look at our rules, my super trend needs to be at plus 60 or above. And that will be outside of these. If you look either on the positive or negative side, we have these yellow dashed lines. This is our extreme zone, which is at plus 60. So the super trend does need to be at plus 60 or above. So if I see a red dot here, and my super trend's way down by its 0 line, I can feel fairly confident that it's not going to get outside of the extreme zone before that run ends. But in this case, the super trend is pretty bloated, so I would definitely watch this a little closer to see how it develops. Then next, we're looking for our blue line to be moving in the opposite direction of the price bars for at least 5 bars. And that's what these numbers on the blue line indicate. They keep track of that for you. So when you see them counting in sequence, that lets you know that the blue line is moving in the opposite direction of the price bars. Now, it may not look that way visually always. It may appear as though the blue line is only moving sideways, but there will still be a slight gradient, and the indicators actually keep track of more precise value than is displayed in the data box. We see only 2 digits, but the uh, computer actually keeps track of a more precise value. And this really wraps up. This is rule 1 and 5. These are kind of two sides of the same coin. We want our price bars plotting in the opposite direction of the blue line. So, and we're also looking for our blue line to get to the correct side of the histogram. And in this case, it does. So I think the simplest way to wrap those 3 rules up in one is to say when this blue line crosses to the correct side of the histogram on my divergence reversal trade, this number needs to be between 5 and 10. And that's it. So in this case, this does qualify. So now I have my fully qualified divergence reversal. My first 5 rules are met. Now my 6th rule, which is very, very important, we want to wait for 2 color bars to plot and then attempt a retracement entry. We do this because even though we have signs of a divergence reversal, all my rules are qualified, sometimes the trend is so strong where, let me flash back a bit here, we'll plot 1 color bar and the next bar is a turn bar, and the trend just continues to move along. So we want to wait for our 2 color bars to plot, and then attempt a retracement back to our original entry price, which in this case is 1360.3, and the high of this bar went up to 1360.6. So likely we could have gotten a retracement. Not always going to happen, of course, but we feel it's better to attempt a retracement than enter early and run that risk of it turning into a continuation, where of course we could likely hop on that continuation, enter that continuation, but we'd like to avoid that divergence reversal loss in between that. So very important to follow that rule. All right, and a couple more questions. Can we look at the core chart and how it differs, and can we go over the rules? Yes. So it's really designed for someone who wants a much more simplified chart. And to identify the single T and continuation much easier. And just refresh this chart so I can bring them up side by side here. So, and this would be helpful for maybe you want to watch a few more markets and really just focus on those trade setups, as those are the only ones that will be able to be entered with this chart. Not responding. This is what Joe mentioned earlier. A bit more reloading time with these. And I do have quite a few charts going at the same time as well, but I'll just give this a second to load up. All right, so it looks like I do need to refresh this section, but as you can see, basically the rule is if you have a red background over a red bar with an arrow, that's a momentum trade. If you have the red background over a short turn bar or the first color bar, in the appropriate direction, that's a trade. And those are the rules. That's really how easy this was designed to enter. So there's nothing else to worry about. All that information is within these background colors. So, or in this chart, all that information is there, just running in the background and uh,
Sorry, I don't know what this is regarding.
basically displayed on this chart. And really, that's how easy it is to identify these momentum entries. Are my bars green? Is my background green? Do I have an arrow? Yes. My single T's. Did I just have an upward turn bar? Is it over a green background? Or is it the first color bar over a green background? Qualified entry. You won't ever get any, uh, you know, green backgrounds over red bars. But it's really designed to spot those, and for people who just want to focus on those trades, maybe watch a couple more markets at the same time, because literally you can just glance at it and know if you have a qualified trade. So, uh, you may have been using Pro9 for a while and more like that better, like having seeing the other indicators, and that's fine as well. But it is available for anyone who's looking for that type of thing. So. Let me go ahead and minimize that. Did have a pretty decent NQ momentum here while we were talking about uh, our charts. And another entry here. And again, this is a good example. So in this case, I would have entered here. So my three EMAs are in the correct order. I may have just had a little refresh problem here, data mix-up. So sometimes that happens with the data. Uh, the live and historical data are on separate feeds, and occasionally uh, it doesn't always coincide or update at the same time, so it can cause these background colors. There will be a new version. I think it was uploaded to the website with that fix. So, but this is a good example, whereas in the example of the trailing stop, widening to the DPI lets us ride over this wick and still be in this trade. Otherwise, we'd have had to re-enter into this momentum trade, and looks like it would have hit profit target, but the longer a run goes on, um, obviously the more wary we become of these runs and momentum trades, because eventually a run has to stop, but we never know when that's going to be. All right, so we did walk through our divergence reversal. Does anyone have questions on the divergence reversal? I know it can be a tricky trade setup when first starting out, um, and may be a bit intimidating because it is a counter trend trade. And so, of course, it feels like the opposite of what you would like to be doing, um, or what you would imagine entering a trade as. But they are fairly strong setups. So, Olivier asks, all right, lay that question on me and we'll try to get you all squared away. We are down to about the last 10 minutes. So please, if you guys have any questions left, do holler at me in the questions box if we don't get to them today, or if you think of them later on in the day. We'll be back tomorrow for our last training day, and we can get to them then. Joe asks, is the retracement back to the turn bar entry price for the divergence? Yes. So, and like I said, that's not always going to happen. But we feel it's safer uh, than risk the market going into a continuation. So, and there was something I wanted to point out about that. But the reason I like that is if we do get a retracement entry before this bar that we retraced on even closes, we'll hit our profit target. So, let's walk through our friend the TF here. So we do have a possible single T entry, but again, our blue line is not on the correct side of the histogram. It wasn't at this point, so even though uh, with how we were discussing earlier, how we can anticipate these trade setups, I have my EMAs in the correct order for a long trade. My super trend is far outside of its neutral zone, but my blue line is very far from getting to the correct side of the histogram. I know with a high degree of certainty that this blue line is not going to cross this histogram. It's much too far. Even if this does plot as a turn bar, it's not going to get there. So, and this is one of those cases where we have to wait for confirmation. And again, I think it's a very good rule to follow. If we're not sure, wait. And even waiting for the first color bar, because even at this point, this is a little too far for me to feel confident that it's going to cross. The only time I'm really confident that it's going to cross is when we're right under it within, 5, maybe 10, but even 10 is a little uh, questionable, I think, because we're never sure it's going to move. Oftentimes it does. All right, Stephen, I will get with you after this class and we'll get you sorted out. Joe D asks, plans to upgrade to NT8? Yes, we are. We're just kind of fine-tuning our version, making sure we get all the bugs worked out. Nothing funny with the indicators before we release that to you guys. So we are definitely planning on that. I'm excited for it. I like NT8 a lot better. I think it's more streamlined and more intuitive and looks a lot cleaner as well. So um, for anyone who's not aware, NinjaTrader did release NT8 recently. So, and I believe they just released an update as well. If you have been messing with NinjaTrader 8 and haven't done that yet. All right, Steve, let me go ahead and jot that down. One second, guys. All right, thank you. Thank you guys for your patience. Mike said, I missed that. Will Pro9 work with Ninja 8? This version will not. This version is for NT7 only. We are working on a version of Pro9 for NT8. So, but I'm just not sure. We're still doing ironing out some wrinkles and stuff. We want to make sure all of that is worked out before we release that. All right, everyone, down to about the last 5 minutes. Are there any more questions? Is there anything you may still have a little bit of confusion on, something that's not clear? Please let me know. We want to make sure everything is clear so you guys can start trading if you're new to Pro9Trader. One thing I will mention, I do like to try to remind myself to mention this in our training classes, is confirmation bias. I'm sure a lot of us as traders try to look for patterns, new trade setups, and those things kind of pop out to us, especially when you just look at charts all the time. Um, and because what we're really doing here is just pattern recognition. When we see a certain pattern, gives us the go-ahead, and we enter these trades. So one of the things I like to kind of bring to everyone's attention is confirmation bias. So what can happen is we may see something that kind of perks our interest as a new, well, I don't want to say a new trade setup. Let's an existing trade setup. Something that we see that we start thinking we can skirt the rules, right? And this is most common with the divergence reversal trade. I don't know why, but it is. So our divergence reversal, as you see, has the most rules of any of our trades. For good reason, it is a counter trend trade. And what happens specifically with a divergence reversal, it seems most often, or that could be my confirmation bias, is that someone will see just a red dot and the blue line cut through. And they say, that's a trade. 100% of the time, that's a winning trade. One, that's probably not the case. Two, and this is where their confirmation bias comes in, is they're not including a lot more information that would help us make that assessment, right? We're not thinking about all the markets where that doesn't happen, all of the trade setups we see that are those two parameters that we've decided make a qualified trade and let us kind of disregard a whole slew of rules. They're noticing all that, and that's because of confirmation bias. It's a psychological thing all humans are prone to. In fact, just how our brains work. But what happens is kind of subconsciously, you'll just start noticing those times when it confirms your new rule. And you'll kind of disregard all the other times where that doesn't hold true. So something I like to throw out there, be aware of, because the more you're aware of it, you can kind of put that in check and just remind yourself, okay, maybe I just need to do a bit more research into this pattern I'm noticing, or, with these rules. So I do want to stress that these rules are there for a reason. When Pro9Trader was first being developed, all those rules weren't in place. A couple of them were, and then eventually something stuck out, and then with some back testing, we noticed that, well, I should say Todd noticed, I wasn't the one developing it, noticed that adding this rule, looking for this extra parameter, eliminated a lot of losing trades. So the rules are in place for a reason. They aren't just thrown in there willy-nilly. It should not be disregarded. We do want to make sure these are the most qualified trade setups we can find. Last question, since I don't see any more, and then I'll be signing off for the day, is Jennifer, I'm new, but how do I fund my accounts through NinjaTrader if I'll be using Pro9Trader and Recoil? You can just give them a call. Let me see. They actually have a website. Naturally they do. But there is a page on their website. And you can actually just call them directly for new brokerage accounts. Just go to ninjatrader.com, contact, and new accounts. And then they will set you up. They'll start that process for you and get you all squared away. All right, everyone, I'd like to thank you for joining me on day 2 of our quick start training. We will have one more day tomorrow. We'll kind of go and walk through some more trades step by step. I'll try to set up some market replay so we can simulate going through a market live and how to enter these trades. All right. So I thank you again for joining me. I hope you learned something that you didn't know before you entered the class. I hope the rest of your day goes well as the trading day. And until next time, happy trading.